Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it was very whipsawed on Friday after the economic activity in the US services sector grew steadily in February, with new orders and employment rising to more than 1-year highs, suggesting the economy continued to expand in the first quarter. The Institute of Supply Management's, or the ISM Non-Manufacturing Purchasing Managers Index, the PMI, also known as the ISM Services PMI, which measures the health of the major sector of the American economy, logged a reading of 55.1%. This was just slightly higher than January's of 55.2%. While a reading above 50 indicates growth, that is below that shows contraction. The index hit an all-time high of 69.1 in November 2021. Looking ahead to this week, we get a heavy dosage of economic data, starting with Tuesday's RBA, or the Reserve Bank of Australia's board meeting, and the official cash rate announcement. The RBA is expected to lift the cash rate by 25 basis points from 3.35% to 3.60%, while all eyes will also be on the US Fed this coming month on the 21st to the 22nd monetary policy meeting. While the US Federal Reserve maintains in a hawkish mode, and along with the recent economic data released, has pushed many investors and traders to price in at least 3 more 25 base point rate hikes this year, and sees an interest rate peaking around 5 to 5.5% range, which is above the 5.525 range projected at the Fed's December meeting. Also this week, we have the main event being the US job numbers, which is the non-farm payrolls. Looking to the current pattern for the Australian dollar, well, we didn't really see a clear break above 67.65, and with the indicators still remain somewhat lackluster, it does give further conviction that we may see a move back to the bottom side of the range, somewhere around 66.5 cents. Until we get a strong clearing above 67.65, that is, and along with that we still have 68.10 to support this engulfing candle. The bears are still likely to continue to weigh on the market this week, but all eyes will be on the RBA on Tuesday at 2:30. The euro, well, the market was very whipsawed as the dollar index, which measures the greenback strength against a basket of 6 major currencies, dropped back towards 104.5. The euro found a little bit more leg room to the upside, but still contained by the resistance of 106.50.55. I feel due to the lackluster technicals, the dollar index may actually recover from around 104.50, where it currently holds, and up towards the target that I'm holding since the last week or 2 weeks, of 106 to figure. This in turn would see further risk to the downside for euro and maintains a bear case towards that key level of 105.20.25 and reassess. The market was a little bit to the weaker side for dollar yen, but still holding to its ground since the recent rally that we saw, and with the support still holding somewhere, I believe, around 138.30. Given a little bit of slippage here from where this support line is, still expects to see a further upward test since clearing 136, and with a projection towards 138 to 142 as the initial target, and reassess from there. Sterling, well, the market found renewed momentum and punched back through that 120 area, but the technicals, like the Australian dollar and also the euro, still remain lackluster. So therefore, I'm a little bit hesitant in coming out with any bullish call, and with a cap still maintaining around 121.5 to 121.70, the market's still very much focused, I feel, on 119.30.35. Reassess from there, as we could see further weakness towards the region of 118.60. The gold story, well, the market still maintains its bullish bias. Since posting an engulfing candle, the market is still climbing higher, and now finding resistance at 1,856 to 58. If that's cleared from a New York basis, then we could see a rise to initial target of 1,872 to 74. But the technicals have slightly risen to an overbought case, and the MACD, well, I'm keeping an eye on this because if it's a weak signal like previously seen back in November could see some of these gains returned and find support around 1,838. A very whipsaw price action we can see here for oil as the market took the challenge briefly closer to that 74, 70, 80, rejected and then rallied on and now closes to a positive case and therefore could see a further rise, but up towards anywhere from $81 to $82 a barrel overbought, and therefore could find profit taking and also whipsaw price action continuing. So do be on your guard if you are trading. I would rather prefer to wait to get to closer levels around $82 or based to the support area of 72, 40, 60 and not get caught up in this whirlwind of price action that we are currently seeing at the moment. Well, that's a wrap for the morning. Thank you very much for joining me. And as always, look out for the ECNTRADE report. I hope you enjoy the great start to the new week.